Andrew here from The Investor's Way, and welcome to Woody's Weekly Wisdom, episode number 61. And today we're looking at this article and the headline that the ASX 200 hits 8,092 points at Wednesday's close, another record high. And there's a number of things in this article that I want to talk about which are interesting and certainly worth our review. But before we dive into the article, do me a favor, if you're watching this on YouTube, hit the subscribe button and the little bell to get notified when these videos are uploaded. And if you're watching on Facebook or LinkedIn, give us a like, a share and a comment to let us know what you thought. But the share is all about getting more and more people exposed to these reviews and what we're doing, and hopefully helping expand the number of people who are looking at growing their financial literacy. So much appreciate anybody who can hit that like, share, and comment button and share the knowledge that we're putting out with these weekly wisdom episodes. So let's have a look at it. Share market. We haven't talked about the share market for a little while on these weekly wisdoms, and with us hitting a new all-time high in Australia, which was off the back of the US hitting another all-time high in their market. And I think before I dive into this, something that has been coming up with client conversations in the last week or two is that I want you to understand that we're hitting all-time highs at the moment, and likely we're going to hear that more and more over coming months, because it's taken the Australian market in particular a long, long time to climb back up to where its previous all-time high was in the around the 7.4, 7.5 mark. And so every time we close a little bit higher, it's going to be an all-time high around these levels. And stock markets don't just beat the previous all-time high by a little bit and then fall away and not set, I guess, a much more challenging all-time high or a much higher all-time high. So I believe over coming months and maybe even years that the Aussie market is going to go and find a new all-time high. Where that will be, nobody really can say, but I would not be surprised if it's significantly higher than where we are today. Now, in what time frame? Nobody knows, but it's very unlike a stock market to just go just past the previous all-time high and then drop away. So we've got lots to look forward to when it comes to the stock market and what's going on there. And so let's just talk about what this story is trying to highlight. And predominantly, it's saying that basically, the market had soared on Wednesday's trading, and in fact, all 11 sectors that this particular article was referring to, were all gaining, which is fantastic. But the big gainers were, in this case, it says energy, and miners. I imagine it means the energy companies, mining companies, and the banks all fared really well. And then they talk about a couple of individual stocks that had great days. We won't get caught up in any of that. But and then again, we've got some more here as well. But what I want to talk about here is, what does this mean to the bigger picture? And there's a little bit of that commentary in this article talking about at the same time as the stock market hit an all-time high. We also got a CPI result showing a 1% growth in the second quarter of 2024, which is positive. The economy growing at better than just less than 1%, like it had been in previous months. We had a quarter there where we only grew by 0.1%, which was starting to get people fearful of the dreaded R word, recession. So a solid 1% growth for the quarter is a good thing. And then obviously at the same time, we also had the news that our headline inflation rate had increased from 3.6 to 3.8% in the March quarter, which was heavily expected. But it is also then, as it's shown here, it's put a shining light on what the Reserve Bank are going to do next week in Australia with the official interest rates or the cash rate, the official cash rate, because they just haven't been able to solve the inflation problem. And as you probably know, their target range is in that 2 to 3% range. So seeing it increase at this point of our journey is not what they were looking for, and it's not what the Reserve Bank's looking for. So there's some fear that interest rates will be increased, but the Bank of Queensland chief economist suggested here that it's unlikely they will increase the rate because of other factors that are going on in the market. And that's new order growth or slowing new order growth is not a good sign for the second half of the year. So that was one of the things that they saw. And the other thing is that the labour market is doing well without necessarily being overheated. And so that's another thing that will play into the conversation. But I think one of the bigger things, and this is something that this article doesn't necessarily delve into, but there are other news stories around at the moment talking about how tough a lot of businesses are doing it. And there's a number of businesses, or if you go into shopping malls, you see a lot of spaces that are empty, and that's obviously a result of these massive increases in interest rates that we've seen over the last 18 months. And then obviously just this week's another one of our smaller airlines going into administration. So there's a lot of pressure on businesses, and we're seeing that flow through to people and their cost of living scenario is also being really pressured because of the rise in interest rates. So I think there's a real inclination and likely result that interest rates will not go up, but the Federal Reserve, the Reserve Bank of Australia is going to be very keen to get that inflation number falling again rather than rising, because I think if it rises one more time, then they're probably going to bring out the sledgehammer of interest rates to really, really throttle people's spending, despite a rise in interest rates just leading to more costs going up, which then fuels the inflation number. So it's like I've said many, many times, it is a self-fulfilling tool that they're using to try and curtail inflation, but at the end of the day, that extra interest rate cost has got to be passed on to people, and that ultimately gets passed on to their consumer spending. So it's not the greatest of sledgehammers to use, but historically it's worked. But in this environment, it's proving to be a little bit more stubborn. So then we've got some more talk here about the Reserve Bank and different companies that have done well in recent times because of commodity prices and the rising market in that respect, or declining prices, they're saying here, which is interesting given that not that long ago gold hit an all-time high. So interesting to see that they're suggesting those prices are declining. Sure, it's come off the high, but it's not as though it's necessarily in the doldrums. So what does all of this mean? What does it suggest you should do when it comes to managing and growing your money? And for today's weekly wisdom, I'm going to focus entirely on the stock market. And the fact that this article started out with the fact that the Aussie market was hitting an all-time high. And what does that mean? Because for a lot of people who are not familiar or got long histories with the stock market, seeing the market at an all-time high is something that generates a little bit of fear, because they're fearful that the market is going to only do one thing and fall in value. And if you'd have held that view back in, say, October last year, when the market did drop a little bit, you would have missed out on massive returns since that date, because the market's done nothing but climb since then. Sure, the market goes up and down every day, and it goes in waves, and it never goes up in a straight line, and it never comes down in a straight line. But at the moment, we're in a scenario where we're in a solid uptrend or upward movement. And like I said at the beginning, stock markets don't just beat the previous all-time high. They go on and create a brand new one that will hold for some time when the market does finally pull back. And so I don't think we're at that point yet. And if you follow what I teach when it comes to stock investing, and that is to be consistent with your purchasing, you'll take advantage of the markets when it's high, the markets when it's lower, and at its lows. And in the long term, you'll get the results you're looking for when it comes to growing your wealth from the stock market. So take this as a great opportunity. The other thing I always say about stock markets when they're at all-time highs is, generally speaking, nobody's losing any money, because if the market's at an all-time high, now it doesn't apply to all individual stocks, obviously, but if it's at an all-time high, there's less people losing money and therefore less incentive for them to sell. But unfortunately, some of them get scared that the market will drop, and so they do sell. And sure enough, the market drops as a result of their selling. And then the big institutions step in and go, well, we're going to take advantage of these discounted prices, and they buy back in, and the market moves really rapidly. And then you see the mums and dads going, well, I've missed this market. I'm going to have to sit it out. Because again, they're fearful that the market's too high, and then it continues to rise, and you end up in this self-fulfilling prophecy of, why didn't I invest, all the way back when Woody's Weekly Wisdom episode 61 came out. So don't be that person. You get consistent with your investing, and over the long term, you'll get the results you're looking for. But the summary of this article, we're at an all-time high in the stock market. We've got the economy is growing at a reasonable rate, which is good for everybody. We've got a little bit of an issue with inflation, and hopefully locking that down so that they don't keep interest rates rising, and and causing a lot more pain in people's household income and expenditure. So use that. Take advantage of that information. And like I said at the beginning, if you're watching on YouTube, hit the subscribe button and the little bell up there to get notified when these videos get uploaded. And if you're watching on Facebook or LinkedIn, give us a like, give us a comment, let us know what you thought, and share it with your network so that more people can become better financial literate investors and money managers over time. So have a great week. I'll see you again next week for episode number 62, and happy investing for this week. Cheers.